The following is a presentation of TFNN.
Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 1st. Boy, how time flies, folks. March 1st, fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today, folks. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call Lost Time is Never Found Again. Let me ask you a question. Let's start off the morning here by asking the question. If you had a bank, I want you to picture a bank that deposited $86,400 in your account each morning. I mean, right now at 9:08 past the hour, no strings attached. Would you want to open up an account at that bank? Would you sign up for one of those accounts? Now, the only requirement by this bank is that you have to spend each penny within 24 hours. That's the only requirement in order to get one of these special accounts. So, question, will you take on this task, this responsibility to spend, to invest, to give to others a portion of your $86,400 each day? Are you ready to sign up for one of those accounts? If you are, say yes. Well, folks, there is such a bank out there, and each morning it credits you with 86,400 seconds. And each night, it writes off the unused seconds out there. It burns the record of the remaining time left. If you fail to use today's deposit, well, the loss is yours. There's no drawing against tomorrow. You see, you must live in the present and on today's deposit. On today's deposit only. Question, what's more important to you, time or money? Which is it that you can get back? Well, like most, you probably selected time as the most important, yet for most of us, we let a lot of our time just simply slip through our hands out there. I think it's already March 1st. 2 months have passed since many people took on some resolutions out there. Folks, always link the known to the unknown. Perhaps if you think of time as your bank, you will invest in it. You'll invest in your health, your happiness, and mostly in your service to others. Perhaps you will take just a few moments and write down your outcomes for the day so that you can take a look at today's outcomes, because you were just given a deposit of 86,400 seconds. How are you going to spend those? How are you going to invest those? Perhaps you'll take a leap of faith. Maybe you'll invest it in yourself. Always govern your clock, folks. Do not let that clock govern you. You know, there's an ancient Chinese proverb out there. It says an inch of time is an inch of gold, but an inch of gold cannot buy an inch of time, folks. Time is our most treasured resource. Use every minute of it, because if you don't, you will lose it. Waste, in fact, 1 hour each day. 1 hour each day. And if you're fortunate to live to the age of 90, you've just wasted nearly 4 years' worth of time. That's the perspective. Use every moment, folks, and thanks for spending your moments, at least the morning, the early start of your morning, with us here at TFNN. Let's go take a look at these markets here. Let's go take a look at the value of money now. Let's go see what's going on here. We've got the Dow futures off about 52 points, trade out at 13,986 right now. S&P futures, that's where we'll start. The ES Mini trading off about 8 points. If my voice sounds a little bit different, I am fighting a nasty little cold here, and it is a little chilly down here in Florida today. So apologize for that, and I hope I'm not going to sneeze too much during the on-air time out here. NASDAQ futures off about 12 1/4 points out at 27.25. King dollar on the move, up 32 ticks right now. Well, we're going to certainly key in on the currencies. We'll start off taking a look at the pound in just a few moments out here. The pound getting pounded. The euro back 60 ticks as well. Interesting, and there's plenty for us to take a look at here this morning. We've got gold up. Gold's up $7.70. Silver, after making a new intra-period, let's say a new low here over the course of the last several weeks. Silver now up 23 cents, up 0.8% on the day. What's up there? And then we got light sweet crude back $1.26, trade out at 90.79. Across the pond here, the DAX is off 61 points right now. The FTSE down 30. Over in Asia last night, the Nikkei was up slightly. When I say slightly, 47 points, about 0.4%. Hang Seng down 0.6 off 140, and the Shanghai off 6 points, so barely budging out there. Again, our call number is 877-927-6648. Would love to hear from you on Fantastic Friday. Let's start off by taking a look at the ES Mini. Let's go take a look at the EKG of the ES Mini. We can see yesterday, we know it got up to a higher high. In fact, at about the 3 p.m. time frame, moved up to a higher high. There really wasn't the energy behind that move. Gave you a nice little reversal signal there, a bear sash, bear engulfing candle, both of them really at that stage. And then the market just simply has sold off about 20 points, getting down to a low here, coming into the time period of, this is a half-an-hour chart that we're looking at about 8:30 this morning as it got down to 15:03.25. Could easily move down to sweet 618. That would be the 1498.08 level. In fact, I suspect that that's what we'll see. We'll see another little push down out there, and then maybe a bounce. Steve, how can you say that out there? Well, just really paying attention to the charts, and kind of interesting here, taking a look at gold and silver and seeing what they're doing, because King Dollar's up, gold and silver is up. What's up with that, folks? We'll certainly take a look at it. So what is it that I expect here as we take a look at the ES Mini? Well, number one, we can see moving down into that oversold territory as we're coming into the 8:30 time frame. So we know that has to be worked off, and it's working that way off right now, really just by simply moving sideways. I wouldn't exactly call that an up move, until it really takes out this candle body at 7:30 this morning. And the top of that body being the 1507.75. We'll just call it 1508 out there. If it gets a close above that, then you can see a retracement. Where would that retracement be? Well, just simply a 0.618 retracement would be the most likely outcome, going from the high of yesterday at 1524.50 down to the low that was put in here at 8:30 this morning. Sweet 618 would take you right back to 1516. So I'd say 1516, 1518. In fact, that might be the place where you might want to consider taking a short out there. But that's on the ES Mini, one thing at a time. And when I say there's a lot to talk about, we've got Apple. In fact, I'll go over to the Apple chart here real quickly. Apple right now trading out at 437.90. So let's go over, take a look at the daily chart. Why is that important? Well, if we take a look at the swing point low out there, it's 435, January 25th, 2013. That 435 is going to be tested today. So it'll be real key to see what does Apple do. Is Apple going to just simply test that area? Is it going to do it on light volume? Well, let's take a look at the pullback. The pullback on light volume as it comes into that swing point low. Take a look at yesterday's volume, a paltry 11.5 million shares. That is not the type of volume that's going to take out 43 million shares to the downside, not unless there's a lot of energy to run that race here today. But regardless, we want to pay attention to Apple today. 435, round number low. I always heard Basil talk about round number highs out there. Don't know how the round number lows work out, but 435 is the actual low. That should be penetrated today. We'll see if Apple closes. Look, if Apple closes back up, if it gets below 435, closes back up above 435, not enough to bust them down. Of course, what does that mean? It means we'll try to bust it up. And where does bust it up take you to? Really takes you to the last swing point, the area of resistance, which has only been tested once out here. That would say the February 11 time frame, out at about the 485, 44.94 to be exact out there. But one thing at a time. Talk about one thing at a time. Let's just simply go over into the currency marketplace, because that's what's really driving these markets here. And we're going to start off taking a look at the Great British Pound U.S. dollar. This thing, folks, truly getting hammered and moving on the daily chart. That's what we're looking at. That is in the extreme oversold territory. Extreme oversold territory. That means a bounce is on its way, but not until the bulls show up for work. And there are no bulls that have shown up for work. In fact, here in this last, we're looking at the daily chart here. This is a falling three candle. This is a continuation candle. That's where, well, actually, this is not a falling three. My apologies. Let me back up. It's just it's not a falling three candle, but it is a candle here that says that the pound wants a little bit lower to go, maybe 149.75. That would be the 1.272 expansion of a set of swing points. That expansion being the low here of June the 1st, all the way up to the high on January 2nd. And quite frankly, on January 2nd, there was a divergent pattern. It's one of those patterns that I taught at that workshop, the great workshop that I did. I think it was a great workshop that I did last Wednesday, just simply all the great feedback coming in on it. In fact, there was a trade yesterday set up on the ES Mini just as it was making its highs that, quite frankly, worked out. It was a 20-point move. I didn't take it, and I'll tell you why in just a bit here. I won't make that mistake again, not with the probabilities of the success of that trading pattern that is out there. But if we do take a look at the pound out here, Great British Pound potentially making a 1.272 butterfly pattern. Let's go draw that in, see what that looks like here. We come off of the swing point from June 1st. That's our low. We'll come up to the high that was put in here January 2nd. It's actually not a pretty pattern at all as far as butterflies. It's got some pretty tight wings out there. Nonetheless, it is still a 1.272 expansion that still qualifies as a butterfly pattern out there. Of course, it doesn't really qualify as it stopping at 1.272 until the bulls show up out there. If, of course, this area fails, says the pound will really get pounded, it'll move down to the 1.4604 level. That would be your 1.618. Do I expect it to do that now? No. I expect with it getting into these extreme oversold territories to see a bounce. Does it have to happen today? Absolutely not. But I do expect that we'll see the move lower in the pound start to dissipate out there. That says that King may take a little break, at least with regard to the relationship of the pound U.S. dollar, which is one of the five currencies in the basket of currencies for the U.S. dollar index. Let's go take a look at the Queen. Let's go see what the Queen is doing. Let's go take a look at the euro. Let's start off by looking at the 30-minute chart on the euro. Now, the euro here could be making a falling three pattern. The reason why the pound wasn't, I'm not going to go back to the chart for you. The reason that the pound wasn't was because the candle I was looking at was actually a green update candle. In this case here, continuation pattern means continuation to the downside. That's why we're taking a look at this body here at 7:30. You get a close, which really we're below it right now. It says the euro wants to go ahead and continue lower. That will put some fuel in the U.S. dollar index. Expect the euro to get to 129.781. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. If we left off taking a look at the euro U.S. dollar currency pair. We're looking at the 30-minute chart out there, so I want to go back to it here. You'd get a continuation pattern following three. If you get a close below the price point of 129.919 out there. Right now it's trading at 129.915. That would be a continuation pattern. You want to understand those continuation patterns. We're looking at a 30-minute chart. Says the euro looking for the 129.781 as its next level. So it's basically there. Beyond that, 1.618 expansion. 129.285. The euro on the 30-minute chart is inside the oversold territory, so it needs to work that way. It needs to work its way off. Now, it can do that either by moving sideways or just simply rejecting this area and moving higher. If we take a look at the daily chart, though, on the daily chart, what we can see is it has broken through the euro, that is, has broken through a previous support area. That support area is the black horizontal line going across my screen, really set up by this large bullish engulfing candle from January the 10th out there. Engulfed, 1, 2, 3, 4, 5, 6, 7, 8, 9. Well, engulfed sessions, quite frankly. How about this? Going all the way back to December 19th. So this one candle right here on January 10th engulfed all of the trading sessions going back. Was that important to understand? Yeah, I would say so. I say a bullish engulfing candle that engulfs one trading session or a small body trading session says, okay. But something that engulfs a time period, just totally engulfs it, that's a big appetite out there and says, okay, that's where the bulls are. And in fact, that's what we saw with the euro. We saw the euro push higher really right after that candle. Again, this candle here being January 10th out there. You can see even as the euro just simply moved sideways here, it never really was able to break that level. I mean, I'm talking about the level of the highs out there. So it's important to understand that. Also important to understand when it gives way to the downside. In this case here, that's in fact what the euro has done. What we can see is coming off of the lows to the highs out here, 0.786. Let's actually go. It creates a 0.786 Gartley buy pattern. Let's go ahead and erase that. I'll actually just simply use the retracement ruler. We're going to go from the low of November 13th all the way up to the high on February 1st out there. Now you can see where the 786 is, 1.28841. Breaks that area, it'll go ahead and make a move of a move. Because that is a 0.786 Gartley buy, if that fails, that says the euro would actually want to make an expansion to the downside. Will it do it immediately? No, it takes some time to work its way down there. We can see here on the daily chart, though, the euro also getting into that oversold territory. Why is that important to be paying attention to on our relative strength indicator? Well, it's pretty simple. You just go back to other time periods out here. We take a look at the euro. The euro made a pretty significant low as it made its way down to the lower portion of that relative strength indicator back on November 13th. Did the same thing as it moved down to that area back in July 24th. Of 2012. out there. So always important to be paying attention to these areas. You got really a fantastic reversal signal, quite frankly, as the world was falling apart inside the euro back in July 24th. You actually got that signal, that confirmation, that which I taught last Wednesday, not this past Wednesday, but the Wednesday before at the workshop that I do for my clients out there. What really a great signal here on the euro to have taken a long position, and you would have been one of the few to have done that as the euro made a lower low coming into July 24th. You would have got the signal on July 25th, and take a look at that move, certainly to the upside out there. So that is on the euro. That is what is putting movement into the U.S. dollar index, because you got the euro represents about 58% or so of the U.S. dollar index. Then you've got the pound. Let's go clean this up by taking a look at the last currency. It's not the last currency because you got the Canadian dollar. But with regard to a weighting structure, it's really the U.S. dollar, Japanese yen out here, just kind of inching higher. In fact, inching higher. We take a look at, let's put this on a shorter-term chart. Let's go see if there's a pattern out here in the 30-minute chart, just to understand what's going on inside the Japanese yen, U.S. dollar, Japanese yen currency pair. Come on, baby. Just waiting for my screen here to update. Should take a second. And as we wait for that, right now we can see that there we go. That was going to be a little head fake here. We come off of the highs put in on the U.S. dollar, Japanese yen. We go back to about 6:30 in the evening on February the 24th out there, and we'll come all the way down to the lows, that little waterfall cascade coming down into February 25th out there, of course, moving into oversold condition and just simply moving sideways to work that off. What we can see here is the U.S. dollar, Japanese yen. Looks to me like now it is ready to start pulling back a bit. It's at 92.85. Of course, it did get at about 7 o'clock this morning. This is a 30-minute chart we're looking at. It moved into the overbought territory, so it is just really working itself off, moving sideways. Maybe it wants to, and it did. What it also did was a 0.618 retracement. Take a look at that beauty. 92.98 was the exact number of a 0.618 retracement from high to low out there. What it actually did, folks, coming into the session at 7 a.m., got up to 93.02. You got to love your 618 retracements. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow trading down 67 points right now at 13,986. Composite down 19 points. That's actually the leader in the clubhouse to the downside. Russell 2000 off 0.7%, trading down about 7 points out at 904. S&P's off 9, trading out at 1505. Google down 60 cents. Apple at 435 and change, down $5.70. That's what I've got on my screen. If you are watching us on Tiger TV, maybe you're listening in on the radio or your mobile device at tfnn.mobi. Remember, this show, as all here at TFNN, do stream live to your smartphone devices. Just go to the homepage of TFNN.com. Over on the right-hand side, you will see the button with the smartphones. Go ahead and click on that, and you'll be able to see this show streaming live. You'll be able to see our charts out there. If you take a look at things popping and dropping in the marketplace, you got Intuitive Surgical. ISRG up $45 and change, up about 9% this morning. Salesforce Innovation, CRM, up 3.5%, 4%, we'll say, up about $6. Decker's Outdoor, up 11% this morning, up $4.71 out there. You've got to the downside, Carl Icahn Enterprises, IEP, off about 11% this morning. That stock is getting hammered, has been getting hammered here for a while, down about $9. Again, Apple down almost 6 right now, so it's going to be testing that 435 area. We'll see if it can bust that area loose. You got Atlantic Power Corp, AT is the ticker symbol. They're up 35% this morning. What the heck? Now, it was a $6 stock, or a $9 stock last night. It's now a $6 stock out there. What is going on behind Atlantic Power Corporation? They had a wider Q4 loss. We'll take a look at that equity out here, just truly getting hammered out here. So we are paying attention to Apple right now. Now, I've got the 30-minute chart on the screen, so it'll be interesting to see if it can find some support here. If you take a look at the volume that actually came in at 10 a.m. during that first 30-minute session going back to January 28th out there, had big volume, 65 million shares during that, supposedly, during that trading session. I don't think I have a bad tick out here. I'll go back and put this on a 10-minute chart and then just kind of move to the back here. It's going to be too hard to put this all on one screen for you to take a look at. But most certainly between that 9:30 and 9:40 opening, there were 30 million shares or so. So we'll see what Apple can do. As we said yesterday, taking a look at the pullback. If we come back, take a look at the daily chart on this. Well, we'll see volume down there. It was 43 million shares. That's what it needs to break. And yesterday coming back with only 11 million shares. But we are towards the end of the week. Let's go ahead and put the weekly chart up here and see what we see. So for the week of January 25th out there, 142 million shares. That's what it needs to break with conviction. Through yesterday was only 63 million shares. So it would have to have one heck of a day to truly bust loose. Now, if you close below it, all that really sets up as a potential break to the downside and a test of it would want to come back and test that area where it just broke, meaning the 435 area to confirm. But we do know Apple does have an A to B equals CD down. The first level is 395.63, but most likely it's 341.17. That would be written all over it for Apple. Let's go take a look at Intuitive Surgical. Let's go see what that stock is trading into. If anything, ISRG is the ticker symbol, up $41 now. Give me a moment here. Why isn't this popping up on my screen? Give me a moment here. Sorry about that, folks. ISRG should be trading out at $550. It is trading out at $550. Well, let me refresh my screen here. I get some bad data somewhere. Give me a second here. My apologies. So I got Intuitive Surgical, which I'm trying to pull up on my screen here, and I seem to have a little bit of a data issue. So I'm going to have to pass on Intuitive Surgical. I don't know what's going on there. But let's go take a look at, I did want to take a look at that stock that's moving to the downside here. AT, Atlantic Power, 35%. Let's go see what that is moving into, and let's hope that I have some better luck out here. AT, there we go. That's gapping down with volume. What a nasty-looking chart this is. Let me continue to pull this back even further. Boy, this thing is at all-time lows. So this looks like it had an IPO, folks, going back into 2009. Let's put this on a weekly chart out here. Let me, now I'm concerned that my data flow through here is a little bit suspect. I had a problem earlier, but does look to me like that is correct. Looked like it IPO'd back in the 2009 timeframe. Not a soul here in a profit position inside AT. That's a rotten shame out there. Let's go take a look at Salesforce Innovation. CRM is the ticker symbol. They're having a good morning out here. Now we'll go over into the ETFs. We'll take a look at the ETFs and the Dow. Actually, take a look at the Dow first because I want to see if the Dow gets below. We'll take a look at what the key for the day is. But we got Salesforce Innovation. Oh, Salesforce Innovation. How about this? I did not notice this. Looks like this has an island reversal. How about that, folks? So let's go ahead. We'll finish off taking a look at Intuitive Surgical. Just update my chart out here and to make sure that is the case. I want to get rid of some of the data that's on here. Salesforce Innovation made a island reversal candle formation here on January 28th. I had not noticed that, nor had anybody even pointed that out to me. What's an island reversal? If you take a look at the trading session from January 25th out there, the high was 175.74. It gaps up the following trading session. The low of that, 176.65. That created your first gap. If you take a look at the trading session of January 29th, goes ahead and gaps down. Does it with 1.5 million shares, but the high of that gap, 175.99. You have air in between this little candle out here, island reversal. Look at today. Today it pops up on good earnings news. I believe they were out with earnings and has sold off ever since. Reversal signals out here. What does that set up in place here with Salesforce Innovation? Probably sets up coming back to this little sign of strength out here, going all the way back to November 21st, that level being somewhere right around the 149 to 159 area. But it looks like to me that's what Intuitive Surgical is doing out there. So we got the Dow. Let's go over and take a look at the Dow. I think that's important to be paying attention to. The Dow's off 111 points right now. Let's go take a look. We'll first start off by taking a look at the weekly chart on the Dow because I think this is really the key chart out here. So let's go ahead and pull it up on the screen. We'll pull up the weekly chart. Now, the number to have at least hit the all-time high was 14,198. I didn't exactly do that yesterday. Made it within about, 35, 40 points. The actual high yesterday, 14,149. So, yeah, 50, we'll call it 50 points out there that it missed. Now, what you can see if you're watching us on TigerTV, and I think this is probably one of the most important charts to be paying attention to today, and I'm going to use the weekly chart since we are closing out the week here. If you take a look at the weekly chart, the actual swing point from October 12th, 2007, the low of that is 13,950.25. The high is 14,198, 198.10. Right now, trading at 13,950 in 80 cents out here. If the Dow can manage to close above 13,950.25, what the Dow will have successfully done for a period of now 5 weeks. So we're talking about when the Dow broke in on the February 1st level. You can see it broke into that area. And then for the ensuing weeks, the week of February 8th, the week of February 15th, last week, the week of February 22nd, and now this week would be the end of March. It would be March 1st. If it can close above that, when you close inside a swing point, it says what? It says if you can close inside a swing point, you still may want higher price out there. So I believe that number, 13,950.25, is the key number in order for you to be paying attention to coming into today's close. Because if you can close, and not you, but if the Dow can close back inside there, that is saying, you know what, its work to the upside may not be over just yet. Maybe saying, as my friend Lee Corso says, not so fast out there. However, you get a close below 13,950, and then all bets are off. Then you will have had your first rejection of that weekly swing point out there. So that is the key to be paying attention to. If we go over and we take a look at the Dow Diamonds out here, let's see what they did yesterday. In fact, yesterday inside the Dow, yesterday inside the Diamonds, what we got was a shooting star candle. That is the opposite. That is the cousin to the hammer. The shooting star coming at the top of a move. There were a number of candles in the marketplace yesterday that looked like shooting stars, but they really were duds. And all I mean is they looked like a shooting star, but they really weren't. They really weren't a shooting star. They really weren't a reversal candle. They looked like it, but they really weren't. And they weren't because they didn't come at the end of a move to the upside. They came at a point in time where the market was really just moving sideways out here. Well, in my opinion, if we take a look at the Dow Diamonds yesterday, the Dow Diamonds making a higher high with what? With volume behind the move. 11.4 million shares. So you got the shooting star, you got the reversal signal out there. However, it made 11 million shares out there. We haven't seen a day inside the Dow. In fact, if you come back to the trading session where the Dow broke out on December 31st, that was with 12 million shares. That's 12 million. That was the last time we saw a volume like that versus 11.4 million out there. So, important day trading session. I think the most important trading session today to really be paying attention to is the Dow. You've got volume up there. That says, okay, if you don't break the weekly swing point low, going back to those all-time highs, says to me that the Dow will at least want to go ahead and make another run for those highs, or at least test the low of yesterday's candle. And that low is 140.18. The high is 141.31. If we take a look at volume today, now, we could change that. Well, one of the things that could change that would be today having volume off of the top. So just like you got volume up there at the highs, today, because we know that it was making, the diamonds were making a new high out there, what would change that, having that high volume out there and saying, okay, I'm going to go ahead and test that, would be volume off of the top. That means that today what you'd need to see to the downside would be more than 11.4 million shares. And I don't mean 11.5 million shares. I mean like 14 million shares, 15 million shares, some type of expansion of volume to the downside. So far, in only the first 15 minutes of trading, about 1.2 million shares out there. But that is what I think the trade setup is that you want to be paying attention to inside the Dow Diamonds. If we go back, and let's go take a look at gold and silver. Let's go see what Goldilocks and Hi-Ho Silver is doing out there. You've got gold up $6. So kind of interesting here. Gold is up $6. You would think with the king being up 40 ticks right now that gold and the commodities would be being smoked. Well, some of the commodities are being smoked. You got the light sweet crude. That's down $1.43, so that is being smoked. But the silver and gold not yet participating in that news that the U.S. dollar is making its move higher out there. I would say, something to think about. So if we take a look at it, in fact, the swing point here on gold is December 21st out there. The top of that swing point is 1584.40. Right now trading out at 1584.40 as well. If we go take a look at silver out here, silver actually did make a lower low this morning. Give me a moment to pull up the silver contract. We'll take a look at the continuous contract here. You can see the low that was set in, the 0.786 Gartley buy pattern that was set up on February 20th out there. That low, $28.25, 75,000 contracts. Today so far has done 35,000 contracts. Does not look like enough volume to bust silver to the downside. quite frankly, if silver can close up towards its session high right now, which is 28, we'll call it somewhere right around 28. The session high is 28.79. I'd like to, if it closed right around 28.76, 77, something like that, what it could create here would be a hammer candle. A hammer candle after pushing lower out there and then also rejecting a swing point and then still keeping intact this 0.786 Gartley. And it's a beautiful Gartley pattern out there because it also happens to have that 1.272 or 1.618 expansion of the B to C swing point out here. So the Dow is the first key chart to be paying attention to on the weekly basis. I would say the next two charts out here, and we'll go, how about the next chart of importance? I'll say the next chart of importance would be silver, because silver not being able to bust it down, so then I'd go to a gold next. Maybe gold would be the first one, maybe gold would be number 2, and silver number 3 out there, because they certainly are not joining in. Somebody out there is saying Steve-O's saying there's a little divergence here in the marketplace. And then number 4, I say the chart to be paying attention to is going to be none other than Apple, because we know that 435 area, if it hasn't already been tested, it is going to be tested. So where that closes is going to be important. Let's go and pull the Apple chart back up, and it's 434.25. Okay, so we got the 435 level being tested out here. Let's go ahead and put this back to the daily chart. So that's going to be another chart for you to be paying attention to. Volume so far, about 3.4 million shares in 18 minutes of trading out there. Again, the volume that it really needs to break with conviction is 43 million shares to the downside below $435 out there. If we go peek in on the ES Minis, let's go see what the ES Mini has done here. Getting very close to that 0.618, the retracement that we talked about. That was down at the 1498 level. It's actually gotten down to 1499.50. So close enough for me. We can see. We'll put it off. We'll put it off. We'll go over to the actual 10-minute chart on the ES Minis. Right now, the pattern that I'm looking at, if you get a bullish candle here over the course of either this session here at 10 o'clock or the one going into 10:30, would set up that the ES Mini is ready to make a retracement higher out there in the marketplace. Boy, time is just absolutely flying. Right now, we've got the Dow down 79 points, S&P's off 9, NASDAQ down 24. Our call-in number is 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow down 77 points right now. Composite off 24. Let's go peek in here on the ETFs. Excuse me. And thanks for your patience today while I fight off whatever little bug it is that I have brewing in my system. No fun. I'll spend the weekend recuperating. We're going to take a look at the Qs first. Now, key here on the Qs, folks, is going to be, so we're talking about trying to maybe prioritize stock charts and price points in order for you to be able to take a look at, to get a good feel for what is going on inside the markets. Well, I think the Qs is also one of those other charts that you should be paying attention to. Why? Because we have that strong gap up on, especially with Apple, breaking through the 435 level. Right now it's at 434.20. So if we take a look at the Qs, just showing the weighting structure inside the Qs as far as Apple is concerned, now you got Intuitive Surgical certainly doing its work to help fight off the Apple shortfall. But if we take a look at that January 2nd gap up, 70 million shares to the upside, and with the exception of one trading session, that trading session being that downdraft from February 25th, where you did get a close below the support line. The support line is really the bottom of that gap up area. That low was 67.23 out there. So with the exception of one trading session since January 2nd, the Qs have held that area. This is a strong area of support. In fact, it broke through that area on February 25th, and when it did, it was only 40.9 million shares out there. Only 40.9 million shares. Not enough to bust it down. It tested it. Once you break it, what Bud always called primary trading ranges. Well, I'm going to also use a gap. Forget about identifying right now a primary trading range. I can tell you that gap up candle is really a primary trading range out there, because that level has really acted as a support area. And like all primary trading ranges, once you bust below it or above one, whichever way, in this case here it was below, you're going to go back and test it. Well, that's what happened in the Qs that following trading session on February 26th out there. Got back above it, wasn't able to get all the way up to the top. The top of that trading range, that consolidation range, is right around the 68.26-ish range. Well, today's going to be important on the Qs. If the Qs can close below the price point of 66.48. I'm not sure what number I gave before. A little dizzy out there. 66.48. That is the number on the Qs to be paying attention to right now. They're at 66.99. In order to have conviction that the market is truly ready to crack here, the Qs are going to have to really probably be the leader. It's going to be the Qs that'll be the leader, I would think, to the downside out here. And what that means is a close below 66.48 on more than 70 million shares. So far today, the 66.48 has not been hit. That level so far today is 66.54. Pretty close. 5.6 million shares in the first 30 minutes of trading. We know volume is always lopsided up front and on back. But even if we took that to see, that'd be 5, 10... Still not enough volume. Even if I did the straight line approach out here, it still is not 70 million shares to the downside. Doesn't mean that we can't get there, but that's what it is that I think that you should be paying attention to. That would be on the Qs out there. So you're going to be paying attention to Apple, going to be paying attention to gold and silver out there, going to be paying attention to the Dow on the weekly chart. You've got your numbers. You know what today is. You know what the numbers are for the day. We've got 3 minutes left in the trading session and only a few moments left in the show here for 9 o'clock. Daryl Martin is going to be doing the Nadex platform, the Nadex trading session all by his lonesome. I'm going to bow out. Just simply have not been feeling that great here this morning. So I'll be back with you on Monday. Right now, you've got the ES Mini on the 30-minute chart. It's trying to form a hammer candle. If he gets up to about 1504.50, that actually qualifies as a hammer candle out there. Folks, thanks so much for joining me. I hope you have a great weekend. Remember this, you have an amazing power within yourself, and that power is so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great weekend, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.